Good day, traders. I trust you are well. Name is Dr. George Nyabadza. I am your price action trader. Now, I trade the 5 minute chart and 5 minute charts, and I've got these markets that I'm trading, 6 markets that I am trading. So, what I want to do for you now, I am in Central Africa time zone, so I trade the London Open specifically, and then I also trade the US Open. Now, as you describe the Open, London Open, first 18 candles on the 5 minute candle, but then I usually go another hour just to it's not an exact science, this first 18 bars, but kind of indicates the Open. But I add another hour, and then if nothing is happening, I just literally just go away, do other things, or stay. If I'm hanging in front of my charts, got my screens open, but I'm doing other stuff that I'm doing, just keeping an eye on the market. Then I come back in the news hour, which is an hour before the US markets open. Most news announcements US news announcements are exactly an hour before the New York Stock Exchange opened. So I come in at that time and I push through for another 2.5 hours, right up to the 18th bar of the US market. So what I want to do today, I'm going to go through UK100, one of the markets that I trade of last week. You will see as you go across, we've got the a bar, a candle that's in the yellow rectangle. That is the first candle of the London Open. Then later on, you'll see another one for the US Open. We'll put in the US Open as we go along. So UK100 last week, 6th of May. This was a Tuesday. Monday, they were closed for May holiday. Trading range open, trading range during the Asian session. Not many opportunities for you to have jumped in. I'm looking for swing trades. Primarily, I'm trying to get 2-to-1, 3-to-1 plus out of trades. So I'm not taking scalping trades as a scalper. You could find many other opportunities, but nothing for me. This was, as it happened to be the high of the previous day. There's a big spike at the open, after a holiday. I just consider that an outlier. So, it's important to bear in mind. So that was my first candle into the London session, and trading range open. Whenever I see a first candle, it's a doji of sorts, and I just call that the whole trading range open. The first candle is a trading range open. Then I got to wait and see what happens. What's the market going to do after that? We had that breakout beneath that low, and if you had put in, which you must always do on your first candle, measured move of the first candle. I mean, if it's gone up, we do it, for the bulls, but for the bears. So that's the trading range of the first candle. That's a measured move to get to the first candle, and we broke beneath that low from the Asian session. I mean, very poor breakout by the bears. So nothing much to have jumped into at this stage. I don't like this, tails and then inside candles. So nothing good to have traded there. But then the market came back to test the breakout point. So you could have taken that trade if you'd wanted and just said where to put a stop. And your goal would have been the measured move of that trading range. Boom. I absolutely love these measured moves. And there you go. Time to take profit. Could have taken that profit as you went along. Now, in here would have been the open of the where am I? 1630, right here. That's the open of the US session as far as UK100 was concerned. I mean, with the UK100, I didn't put it in. The reason I didn't do that, the most important open for me for the UK100 is, of course, the European Open, the UK Open, the London Stock Exchange. So when the US markets open, I'm typically not fast about it. That's not correct to say. I am obviously concerned about it, but for this market, for me, the volumes have come in when the London Stock Exchange opens. Whatever happens at the open of the US session is usually a continuation for the UK 100, the FTSE 100, the derivative, uh, whatever has been happening throughout the day. So we had that attempt by the bears. Oh, the bears did break out, but then we ended up in a trading range, and the bulls never got above that. But anyway, in here, beautiful reversal pattern, one of the patterns that I talk about in my courses. I mean, whichever way you looked at that, higher low, wedge bottom, fantastic. Attempt by the bulls, to come away from this double bottom, wedge bottom, higher low. Eventually, the bulls broke out, so you could have bought above here, and managed your trades and end up in a trading range. So I'm out of the market by the time we get to this point here. My day is done. So nothing much else took place as far as UK 100. And into the rest of the day, just a trading range, as you can see. So when the day ended, that's what we had. We now had a new high of the day. Okay, so this day, that day ended, trading range, bit of sell-off at the end. We now had a new high of the day. And remember, I said that spike at the morning after the long weekend, just consider that as an outlier. This purple line is just my marker for the ask line, so I'm sure it will be shifted at some point. So with the high of the day, low of the day, going into the next day. Again, Asian session with another. Oh, good Lord. I did something there, but we're back. With another, just a spike, a random spike, taking place in the market. And we kind of stayed in a range all the way until I came into the market, UK open. So I always look to the left, and I'm saying to myself, for trading range Asian session, nothing much developed out of there for me. But as I went in to the market before this came in, I was saying to myself, well, I wonder if the bears will be strong enough to get to this low, right, from the open. That was the low of the previous day. Waiting to see the first candle open. If the bears had been strong enough from there, we would have accelerated down. But as soon as that first candle closes, I get enough information for me to become cautious in my trading from this particular candle because it's a doji. I see a doji, I do a measured move because it is a trading range. If we were to go down time frame, say trading range, market went up, market came down, out in the middle of it. What we then got was a wedge bottom. So the bears, 3 times they tried to break to a low level, failed to create a wedge bottom, good for the bulls. Now I'm thinking to myself, well, if the bulls are strong, this is pretty good, macro double bottom. The bulls can accelerate up, but they failed and we just got into a trading range. So pretty boring, time for that market. And as we're in a trading range, as the market carried on, I wanted to see what would happen at the low of the previous day. Nothing, no acceleration by the bears down, kind of trading range and down. The market is going down, but nothing for me to trade. We got to this level and I said, fantastic. Trading range, tight channel, good for the bears. If they're strong, they're going to accelerate down. Maybe we might go down for a measured move of that channel to the breakout. But we didn't. We had a good breakout for the right here. I thought, okay, this is pretty interesting. I wonder if the bears are strong enough going into the US Open, which was New York Exchange Open, right here. Good for the bears. Had the bears been strong, were we going to have a higher probability to break out into a big bear day? They would have followed this through. Okay. I mean, you have a breakout, pretty weak breakout because of that test, a follow through, you get a decent enough follow through. And then we go straight back into the level trying to break out the low of yesterday. Then we get a dodgy big red signals. Do not do anything because the bears are pretty weak. So, pretty boring day. And, as the day unfolded, yours truly is out of the market around here, 5 p.m. my local time. You know, had I've been trading out into the evening, I would have followed through the energy in the market. So, failed breakout beneath that. All sorts of interesting things here. Lower low double bottom, micro double bottom, micro wedge bottom. Market went down once, twice, three times. So many beautiful things in here. Patterns within patterns. Good for the bulls. No follow through at all. So bulls pretty weak. So we went from a failed breakout into a bit of a larger trading range. And then we started going up, levels of concern up here. Nothing really in terms of a tradable candle that I would have wanted. It's just trading range behavior. So, it would have been very hard to convince myself to jump into a trade. After all this trading range. So UK100 would have been pretty lackluster performance, if I may say. Okay, so going to the next day. So the levels that I'm showing you, I always put these in high of yesterday, low of yesterday, first candle. If you're trading, if you're trading in Asia, a lot of my clients are in Asia, you know, there's no open, right? There's no exchange opening as far as as UK100 is concerned. It's specific exchanges. Other exchanges opening Tokyo, Australia, Hang Seng, etc. So you gotta just be watching the price action, considering that whole first 5 hours as the open of the day and look for the patterns there, not driven by any particular exchange for this particular index. If you're trading Hang Seng or something to be completely different. So for example, you come into this day and 8th May and you are trading in Asia, and you kind of look and say, oh, hang on a second, this is quite interesting. We are in that whole opening period. We have bears at wedge bottom 1, 2, 3, double bottom. Bulls have a higher, but the bulls broke out above the high. That's fantastic. Let's see if the bulls are strong enough for me to buy. We'll get another follow through candle. That is fantastic. Now, a little bit of a doji here. Need a little bit more information. So maybe you may consider wanting to buy that. If you decide to buy that, you're buying the breakout. You're not triggered, but you're pretty happy that the bulls are strong. There's an attempt by the bulls to, by the bears to reverse the breakout. I got two EMAs here, two EMAs, 10 EMA that that are used to indicate the strength of the trend, and then the 20 EMA is pretty fantastic EMA to use on the 5 minute, just to see where the which trend direction is. Yeah, something like that. Breakout, tight trading range, higher low. This is good for a bull case, right? Higher low by the bulls. Then when you get the breakout, because of where you've come from, now you can start to buy opportunities to buy here. You can buy here, you can buy here. So pretty good opportunities in the Asian session. And then way up here, you get a reversal pattern, one of the reversal patterns that I speak about. Price action reversal is a wedge top. And here, try to break out above it. We have a higher high double top within here. So the bears are really doing as much as they can to prevent the bulls going higher. Micro double top. So, also the wedge top, higher high double top, failed breakout. So 1, 2, 3. So patterns within patterns. Again, micro double top here went up once, went up twice, accelerated down. So good for the bears. You want to try and sell beneath here, not triggered. Breakout pullback low one. You might want to sell beneath here, not triggered, but I would look to sell beneath that or sell the breakout. The only thing to bear in mind is you are going into the open, and so you gotta be careful. If you take any trade in here beneath that breakout, this is pretty weak. You gotta manage it strictly because at the open, anything can happen. I'm in the market usually looking at charts setting up, but I do not take trades 30 minutes, an hour before an exchange opening. I'm just going to let it go. But you'd have been rewarded pretty nicely Asian session with a bull breakout. We get to the open candle before the open, big bear candle, fantastic. People have been active in market. From here, bears have been selling quite nicely. You have a micro double top right as the open market opens. Bulls fails to get up above that. I would have sold that. Just put a stop above here. Going to put a high stop and manage it. And of course, with that, I'm kind of thinking, well, if the bears are strong after this, and they continue to accelerate down, if I just look at the opening breakout, they have a chance to get here. Let's see if they can get here, take a trade, see if they can get here, maybe accelerate down. But as soon as you're in the trade, you realize something was happening. We get into a wedge formation, a reversal becomes an opening reversal. So, if you've taken the trade and out, you've got to get out of the trade in the face of a wedge. So it gives, the bulls have an opportunity to open a reversal, to accelerate up, and maybe try and get up here. We get a higher low. I wouldn't buy that, but I probably would consider buying that. The only problem will be I'm buying straight into the high of the first candle. But of course, I am aware that we have that high of the day there. So maybe that's how far we're going to go. So we buy it and you manage it to get higher lows, and pretty disappointed the bulls can even get above the high of the session. And later on, we're coming back to test the low of the session. And as we're testing the low of the session, if you look at it, there's nothing for me to have traded here. Why? I mean, just look at it. Big bear candle could have been used, can't remember. We'll come back to the middle of the trading range. This is London session, right in the middle of the trading range. Breakout beneath it, smack bang, and nothing really saying worthwhile to take. We come back and with the same problem that we have yesterday. Low of yesterday, failed breakout, wedge bottom, low test, bulls breaking out, failing to go any higher, bears breaking out, failing to get any lower. By this time, I'm going home. And we just end up with this kind of price action. But, if you're trading this after all of this reversal pattern and you see this, you might say, well, maybe I want to buy this. Fantastic. You buy above here, that will be a decent enough buy. And, put your stop down here. That's where the stop's going to go. Don't compromise with that. And you might have had to get out, somewhere. If you tightened your stop to beneath this after entry, you'd have been stopped out. If you held a little bit and waited to see what would have happened and pulled your stop to this higher low, it probably have been stopped out by, depending, if you're smack bang there, you might just have escaped, but let's assume you're out and you see that, I would buy again if I saw that when I was in the market. Breakout, higher low, double bottom, I would definitely buy that again, and then manage my trade out. So, good rewards there on that particular day. So day kind of end up as a trading range. We come to the next day. Low of yesterday is where the low of yesterday is. And the high, pull down our high of yesterday. Obviously, you keep cleaner charts, right? You clean up things as you go along, but just for the sake of the presentation, I'm leaving everything there. All right, so, we come into the day, 9th, Friday. I mean, you can clearly see I'm just trying to manage the time. Asian session, a big spike, end up in a trading range. Opportunity, you might have considered that opportunity, as a buy, because we're above that level. You're waiting for the breakout. I would buy that. Put a stop beneath here or a stop down here and manage that. When you get something like that, you must exit your trade, break even. And we kind of end up in a trading range. And then look at this first candle. Doesn't get above this high from the Asian session. And you say, okay, if the bulls are strong, which they were on the very first candle, what would you expect? You just expect follow through, right? Bulls were strong, get follow through. Had I gotten follow through there, I would have bought that and managed. But it just ended up as a trading range. And, let me do this and show you. This being a Friday. Market was just in a trading range all the way up to this was the US Open somewhere within here. And the Friday, I'm gone much earlier, but not other opportunity for you to have traded. I mean, you might have considered trading a breakout trade here. If you're taking this breakout trade, which is logical to do, big breakout candle, I would put the stop up here. Okay, and if you're doing that, you're thinking, okay, I'm gonna put the stop up here, just above here. I'm hoping to get to a measured move. Didn't get to a measured move, but you get out as soon as it is forming that. All right, guys, this is me walking through the charts this past week, just one of the charts that I trade. And as I told you, I'm a price action trader. More information on how I trade price action is on the courses that you attend with me. Take care, guys. Name is George. We will catch up again. All right, then. Bye bye.